This is a market review for January 22nd, 2024. Today is Wednesday, and again, like yesterday, there was no orange or red folder news, just a meeting. So we had a bullish day here. Get rid of those lines. Bullish day, huge gap that it didn't come and fill. Not what I was expecting out of today's candle. I was expecting it to close bullish, but I was expecting to come down to here at least to, well, 0 right here, which is the low of the opening range gap, but also to this new week opening gap. But it didn't. Yep, we reacted off of this new week opening gap, fell off that to close, and also failed to take this high. Going down to the hourly, another reason I was bearish today, despite this huge opening range gap, was because London was bullish. 2 o'clock, London played bullish, had some consolidation, but it was mostly bullish. And so when London's bullish, I'm then looking for New York to be bearish, at least at the beginning. So I was expecting AM session to at least take out London session low, which is probably here, around 50% of the opening range gap. But didn't. 7 o'clock, took off all the way until lunch again, which I forgot to put those lines back. Perfect. Okay. As we can see, we had a reversal or retrace started at lunch. So that made sense. Now, we did fall off after taking this high. Sorry, not this one. This high here. So maybe that's something, maybe it's not. We'll retrace down to the first presentation of today, which makes sense in this as well. So if we react off this bullish, it makes sense. When this will get filled, I don't know. I would prefer it not to Thursday and Friday, just for continuity's sake. Because it's very rare that Monday, Tuesday, Wednesday happen, and then Thursday, Friday the opposite direction. But we could, and it could be a very, very small volume week. That's also possible. Because right now we're having a pretty big week, and we've had 2 large weeks. So honestly, a small week is in store and wouldn't be too much to ask for. Down on the 15-minute, you can see it better how London just went up and why I was expecting it to fall over. I thought this was a start and that above this high would give us an SMT, but that didn't happen. So market opened, extended away from opening range gap. Again, macro hit, well actually opening range finished, consolidated, reacted off a 5-minute, which we'll get to, and then extended higher, sweeping this high, reacting off this new week opening gap, respecting both this liquidity here and the new week opening gap high. Then we started falling off, consolidating, and then continuing the move downwards to first presentation. Now 5-minute, again, London went up, was expecting this to start the tipping over. Didn't happen. Reacted off of a 5-minute here, bullish, until opening range, which we went horizontal, all staying within this 5-minute here. Then we expanded higher, sweeping this liquidity here with that blue line, respecting this new week opening gap, and starting to tip over. Once the algorithm kicked back in at 130, we used this as an inverse. Let me go back to the 15 to explain that. So the reason I think this is an inverse, or predicted it to be one is because it was rejected in this candle here. This green candle, we hit it and we reject off of it, so it validates it as an array. And since we break through it, then I'm expecting this, if we are truly bearish, to hold this, to hold price going up and continue downwards, which it did. Yeah, I mean, kind of sweep this low, big retrace. No highs were made though on this or yes. I actually think that's a lie. This here is an SMT between these two highs. Oh, you'll see it on the 1 minute, but and then we went down to first presentation. Right now in the 1 minute, see again, London session went up. 7 o'clock starts around here with this pump lower to sweep these lows. Now I don't think that's an SMT. Checked this morning, and I would have marked it if it was, and I don't recall seeing it when I went back this afternoon. Expanded upwards. Usually 8:30 spools in the opposite direction of the move of the day, which is why this bullish move here at 8:30 convinced me more with this SMT, and then this fall here with a raise supporting it lower. We reacted off this 5 minute once again. Market opened, ripped up. What is that? That's like 100 points, 150 in half an hour. Opening range ends here at 10 o'clock with this candle. And then look at the next 30 minutes, hour for that matter, nowhere. But after 11, we rallied higher. Swept, actually, I don't know why this, this is an inverse, all right. So there's two things I'm looking at here. First, SMT, yes, ignore that, well, don't ignore it, but this SMT is here, so if we were bullish, I can take a trade if I have an array. Now, this one right here, this inverse fair value gap that's marked, perfect, still one. The reason why is because boom, we hit the low, get a rejection off of it, validates as a gap, and once we break through it to the upside, most likely it will hold price going upwards. Remind me to talk about that. I need to talk about that after this. Now another one that could have done is this. Was it that? No, it wasn't that. It was this one. This one here, right? So this is bearish, right? This is a SIBI, sell side imbalance, buy side inefficiency. Sold off, came up to it, respected it, boom. This rejection here validates it, right? So if we extend it over, as soon as we close above it, look at price, staying in it perfectly, and then expanding higher. Let's move it to this one because this is the one I saw first. Now this right here is where I entered. ES was doing a whole lot of nothing. It was reluctantly going higher, and NQ was, well, definitely going higher. So I felt, especially with London session being bullish, I was expecting an AM session reversal, right, to play bearish. So I was waiting for an SMT, got one here. Look at these highs, 57 and 10 o'clock. Pull up ES. 10:58, close enough. All right, 10:58 here. Sorry, that's just the wrong hour. It's 9:58. Here. Where? Here. This high, 57, and then this high at 10 is higher, right? Look at that. High, higher high, and Q. High, lower high. So I saw that. SMT fulfilled. Get this big bearish extension here. Fair value gap created. However, and I entered here and got stopped out here, which was used as an inverse. Why? Because it reacted off of it here first, extended over, breaks above it, comes back, uses it. Technically here, but well, forget that fact. Now, what could have and should have honestly scared me off of this one, but made me more hesitant is this, right? This candle, let's see, it opened, it went 40 handles, and that was pretty late in the candle, too. It was fully extended with like 10 seconds left, and then it shot all the way back up here. Now, that's not always a sign, but when something like that happens, you should maybe be more patient, not take something that's not a perfect setup, and this is by no means a perfect setup. Small SMT, small fair value gap. But good news is, as soon as this candle here closed outside of this fair value gap, I closed, so I saved $100. Now, moving back over here, we're acting off this 5-minute SMT inverse, whether it be this one or this one. Perfect expansion using fair value gap as an expansion. Now I would expect 11:30 to start the move bearish since we were bullish for the AM session, and it wants to take out what was profitable. But it didn't do that. It came up, really wanted this high, so it took that high, came up, and during the macro, right, 10, let's visualize it, 11:50, 12:10. Here, macros start moves most of the time, right? So this one, boom, here, this is the top, so it started it. Now this might be an SMT with these highs here. Let's take a gander. Nope, it's not. Don't know why it can't like put me where I left off. It's kind of annoying. But yep, 1210 higher, expansion downwards, reaction off of it here, multiple times for off the civvy here, playing lower, down here. I think this is the low of the, no, 15 is over here. I think this was the reaction. Bang, yeah, this is 45. 15-minute candle up here validates this. Then we come down lower. Algo kicks back in. We take this high before heading lower. Now, NQ, all these are lower lows, but ES, this high, is higher than this one. So, SMT. If we were bearish, that in the 15-minute inverse combined with this sell side imbalance. Now, it looks small, right? The difference between this candle low and this candle low is relatively small, but since we have a volume imbalance here, it's the whole thing. That gets used, and in fact it doesn't really matter because it taps into the, I'm going to call it the true fair value gap, but expansion there, this 1 minute is keeping it all in, and then I don't remember if this is a macro, no, it's 15 to 45 is a macro, and then 50 to 10 obviously is, so we just expand lower, and we get all the way down here, so I'll say one of the first days in a while I haven't predicted the day correctly, and that's okay, right? No one's 100%. Still have more days. Not getting it right today doesn't mean I'm any worse of a trader. It just means I got it wrong today. Lost 150 today. I could very well make 10 times that tomorrow. So, put everything into perspective. If we look high time frame to end things off, this is a sizable retrace. I like to see us put bullish off this, or possibly come down here. Again, depends what London does. If London plays bullish, I'm expecting New York to play bearish, to come down here, or to this New York opening gap. But if we play bearish or consolidate, and then look for manipulation distribution, during New York, I'll be playing bullish. So as of now, if I had to choose, what would I say? Let's see. It's Wednesday. Week opened down here. That's good. This wouldn't be a horrible retrace. We have news. I'm not sure if it's 8:30 or 10:30, but I think it's unemployment, which comes out at 8:30. I'll say we're bearish. I think we're going to react off this a little bit, give us a reaction, and then New York's going to reverse that, take us lower. That's what I'm doing. As far as rounding out the week, definitely looking to play bullish. I want to take out this high. Definitely, this is now definitely out of reach, but I think we can take out this high. Thursday, take us down here. Friday, take us up a little more. It's doable. So, this was a market review for January 22nd, 2025.